Greetings, members, one and all of the Salivation Nation, waiting for silver to act like gold on steroids. Let's explore! This is an article from Seeking Alpha that talks about the performance of silver. And what it has been like, and what it could be like, and what they predict it will be like in the near future. And it'll act like gold on steroids. But as many of you know, well, the market has been pretty volatile as of late. Silver, a much more volatile metal than gold, and gold has been pretty volatile lately. And as we've seen in recent months, we've been a bit disappointed considering the bull market that we've seen with gold surpassing the real dollar highs or the nominal dollar highs and well above $2,000 an ounce. But the silver still is about halfway to its all-time highs. And we've seen the gold to silver ratio not narrow in the way that many of us think it should. So let's go through this. We're going to pick apart this article here from Seeking Alpha, author from Peter Kroth here. Very interesting indeed, how silver has dramatically outpaced other assets in the third quarter, and that stock investors of silver have been loyal, holding even through price declines. Any near-term weakness is likely short-lived. Buy on weakness and hold through renewed strength. And that is really a good tip for sure if you have faith in the silver markets and what it could do. And my feeling is that has been kind of what I've been about as well too. Although I don't really hold a lot of expectations for silver other than holding and onto its value. What does that mean? Well, basically, essentially, it preserves your wealth during the long course of holding the metal. And the only way for that really to work is to buy it in a smart way. More on that later. He says we're still in the early innings of a precious metals bull market. Well, we're months in, and many would say that that's, we're well into it. So there's some disagreement with that statement, I think, right out of the starting gate. But we'll see what happens. There's a lot of things that are uncertain right now as we're just before a major election. We still are dealing with the coronavirus. There's been 2 delays in third phase trials for the for a vaccine for the coronavirus. And if you're wondering whether you need to own some silver, the author's answer is categorically yes. It's only a matter of degree. With silver, that's important because it acts like gold, but on steroids. Silver can languish for extended periods, even if gold moves. We've seen that for sure. But then it tends to play a rapid game of catch-up, for which we are waiting. Timing such moves is difficult at best. Instead, it's better to build a silver position on price weakness and then simply sit patiently. Sometimes sitting patiently, by the way, may mean that you don't buy for a period of time because you're not sure. It's kind of volatile. Because, as the author will show, the payoff tends to be very rewarding. Let's explore this. Silver dramatically outpaces other assets and has here. It's been on a tear so far this year, up 38.3% versus gold 25.7%. Not surprising. Much of that gain came in the third quarter when silver clocked a 33% gain against gold's more modest 6.7%. This is compared to other asset classes. Here we can see the US dollar index and what's been going on with these other asset classes here, and you can see silver has moved dramatically higher here. By all accounts, silver's been driven by its monetary metal characteristics. The jury is out on whether gold or silver was first to be used as a currency. In fact, more than likely, that was a combination of both in a metal called electrum, which is a naturally occurring combination of both those metals. And that dates back to at least 5,000 years. Fans of both metals should be happy since the oldest known coin is a Lydian trite from around 600 BC, which is made of electrum. Silver was the most commonly used metal in daily transactions until the 20th century. But keep in mind, some places, like in the Middle East, silver was very hard to come by, and that was the only time where gold to silver was really trading at a 1-to-1 ratio. More recently, demand for silver has exploded. The Silver Institute breaks down demand into 5 main categories: industrial, photography, jewelry, silverware, and physical investment. 2019 saw smallish decreases in 4 of these categories over 2018. However, within the industrial sector, photovoltaics, or solar panels, enjoyed a 6.7% increase. So it's kind of interesting how, photovoltaics is kind of replacing, in some degrees, the photography industry. The standout, however, is net physical demand, where 2019 saw an impressive 12.3% increase over 2018. In my view, given the large price gain this year, that trend will persist. As well, Goldman Sachs equity analyst believed global solar installations will jump 50% between 2019 and 2023 as green energy silver demand surges higher. One telling indicator of the stickiness of silver ETF buying for this loyalty factor here is the action of Robinhood account holders. And that is interesting indeed. Some of these Robinhood account holders here is the new way to kind of trade stocks and the like. There were 4 bouts of weakness since the February-March sell-off in silver stocks as represented by the SIL ETF. The number of holders of SIL dropped in a small but notable way in March and then barely weakened after that, even when the price of SIL retreated. Most impressive as the early August action when SIL dropped from 52 to 44. Yet the number of users holding SIL actually continued to rise. If we look at the recent price action of silver, I'm not sure what that $52 is referring to. I don't think that's per ounce. It must be some other metric. We look at the recent price action of silver, we see some renewed strength here. And we can see going back and the movements up there. But it's based off of these charts showing both the RSI and the MACD momentum indicators have been trending upwards. But smart money silver hedgers are still short just over 56,000 contracts, but suggesting bullish sentiment right now. Silver manages to rise from here. Watch for it to possibly test resistance near 50-day moving average around $26. If it reverses from there, then we're likely to be moving to more weakness consolidations before rallying. The silver stocks to silver ratio have been rising slightly through early August. We can see by the circled part of the chart here. But momentum has been flattening, and the 200-day moving average has been acting as overhead resistance. Also in late September, we saw the 50-day moving average cross downwards over the 200-day moving average, which also suggests possibly ongoing weakness in the near term. In the author's view, silver could require more selling to rebalance sentiment. If that happens, then, of course, he'd expect silver stocks to magnify such a drop. He's not taking into account the dollar index as well, too, because the dollar index is going to play a big role here, and I think, and we could still, even though we saw a slight gain today in silver prices, by and large, they've been getting tepid, and some think that they could fall slightly, maybe even below $20 an ounce before the election, which is just under 3 weeks away. All the fundamentals and technical drivers are in place to push gold and silver much higher in the months and years ahead. And we shall see. As the next chart of SLV versus GLD shows, silver is up 108% against gold's 29% since its March bottom. That's nearly 4 times the return, but that's just on paper. As we know, and as we saw in the physical markets, to get an ounce of silver, when it was at its low of $12 an ounce and below that a little bit, and we were hard-pressed to find any silver of any sort for under $20 an ounce. The author thinks we could see silver take out its August $30 high and possibly test the $37 level before year end. I think that's quite possible if we see some instability and unrest after the election. I've talked about that in a prior video too. But if you're concerned about silver's volatility, then just allocate a smaller slice of your portfolio while maintaining some exposure. I think that's sage advice too. Silver is a volatile metal. You got to be very careful with it. And it's not one of those things, as a commenter of mine mentioned on a video, you don't buy silver only to sell it 2 weeks later. But you can really apply any kind of short gauge later, even a month later, unless you are day trading silver. And, essentially they're treating it like an investment. And people do that, and people can. That's not me, which is why I only have the physical. That's right. Just like the song, I want to hear your silver talk. Let's get physical. That's what it's about to me. But the problem with holding physical are the premiums that you use to buy it, and the loss of those premiums, and even some of the spot price when you go to sell it. You don't have that nearly as much with SLV and GLD. But the author is providing very little, in my view, evidence here that when silver gets going, it's like gold on steroids. We're still waiting for that. But I think that even after gold goes up and surpasses its nominal high of $2,050 some odd dollars, we're still waiting for silver to go back over $30 again. In fact, it really never did reach $30. It got into the 29s, but it didn't go over 30. So we're still waiting for silver to act like gold on steroids. But the volatility of the metal is what it is, and it will continue to be what it shall be. And remember that on its way down, keep in mind, when gold falls, silver tanks. And that is something we have to keep in mind when we make our purchases. But the overall advice, I think, is sage. I think it's sound to have some position in silver just in case, because I think it could come in due course, especially when I've talked about, I did a video quite a while on what conditions could be for the silver to gold ratio to be 20 to 1. That's right. That is a very slim possibility, but it could happen in a wild scenario where gold just goes parabolic, and people just get to the point where they can't afford gold, so they're going to go to the assets they can afford. But keep in mind that in the digital age where we're at, especially with other allocation efforts to invest in SLV and GLD, and places like One Gold where you can literally park your money into gold for as little as 1/10 of a gram or even less. People are going to be buying gold in that regard too. And so there's other things that work against moving into a lesser expensive asset class. But I think gone are the days where people cannot really make a valid argument of saying that, hey, silver's undervalued and it's going to close the ratio to gold. That may not happen, folks. We've talked about that in prior videos as well. So there you have it. Again, just as you know, as I've always said, I like silver. I believe in it. I believe in it for what it is and how it has performed historically. But part of the reason why I like silver is because I'm not going to oversell it or overhype it, because that's not fair to silver as the metal for what it is. But more importantly, it's not fair to you, the audience, people watching this video. It's in my best interest, and it's in silver's best interest. Well, it's in everybody's best interest to tell the truth about the metal. Because if we don't, we're not being honest with ourselves, and we're not being honest with our audience. And I feel like I have a responsibility to do that. Although I do get things wrong, and I want to be open-minded about certain aspects of the silver market. There's a lot to learn. There's a lot to digest. There's a lot that can be confused in the silver market. So keep that in mind. All right, there you go. I hope you enjoyed this video. I'd like to extend a multitude of gratitude to you all for taking the time to watch, and encourage you to please rate, share, comment, and subscribe.